Welcome back, champions. Another mind-boggling stock news. In its latest report, the Organization for Economic Cooperation and Development, OECD, provided a brighter forecast for the emerging economy compared to the developed nations. In the face of weakening global trade and continued supply chain hazards, combined with tightened monetary policy, global growth is expected to reach 2.9% in 2023. However, it is expected to weaken to 2.7% in 2024. Yet, this global growth is expected to remain highly dependent on the fast-growing Asian economies in 2024. Here we share with you likely growth trend of the emerging nations in 2024 that can be a vital option for investment. Number 1. China. Despite China's economy stumbling in several months of 2023, the MSCI Emerging Markets Index has displayed more than 4% growth so far in 2023. This is a sign of revival. A Lazard report in this regard noted that China finally started to demonstrate an uptick in investor interest, primarily on the back of policy support announcements from the central government. Assuming no further exogenous shock, we expect China to demonstrate an improving growth trend in 2024. Number 2. India. Being the fifth largest economy in the world, India's real GDP growth in fiscal 2022-23 is estimated to be a robust 7.2%. IMF, in its December 2023 report, noted that the employment level exceeded the pre-pandemic level. While the informal sector continues to dominate, formalization has progressed. The financial sector has been resilient, the strongest in several years, and largely unaffected by global financial stress in early 2023. In spite of macroeconomic and financial stability, in fiscal 2023-24, real GDP is expected to slow down a bit to 6.3%. Inflation is expected to ease, leading to improving consumption trends. Further, surging services exports and public investment will continue to drive the economy. Yet, per OECD, growth is expected to be dented by weather-related events and a weakening international outlook. Number 3. Indonesia. The economic growth pace in Indonesia remains solid through 2023 despite several macroeconomic debacles. Unlike India and China, the OECD reported an improving rate of growth in 2024 for this nation. Per the report, real GDP growth is estimated to be 4.9% in 2023 and is projected to rise to 5.2% in 2024. Household consumption, despite modest real wage gains, continues to be the major driving engine of the economy. Although monetary tightening and slowing global trade will weigh on fixed capital formation, 2 years of monetary tightening have pushed down inflation, which is projected to be around 2.5% in 2024. Number 4. Brazil. Meanwhile, despite the global economic slowdown, Brazil is expected to report 3% growth in real GDP for 2023, banking on a stronger-than-expected agriculture harvest and robust household consumption. With the easing of global inflation in the coming months, as well as an increase in foreign direct investment as the supply chain issue gets resolved, this nation is expected to demonstrate strong economic growth in 2024. Number 5. South Africa. In South Africa, another significant emerging economy, the situation has been quite difficult, thanks to continued unemployment and spending pressure. The current global economic downturn might have worsened the situation further. Per the OECD, GDP growth is projected to slow down to 0.7% in 2023 before increasing by 1% in 2024. Net exports will dent growth as most machinery and equipment are imported and external demand has weakened. Private consumption growth will ease amid still high inflation and lower household purchasing power. Given the chances of potential recovery, adding stocks from emerging countries is a prudent step. Thank you for watching.